Quotes kicked off the new trading week with a consolidation near 3-week highs in the face of the news flow. The European Commission has announced the sixth package of sanctions against Russia in response to a special operation in Ukraine. The restrictions include a complete ban on Russian oil imports within 6 months. However, Slovakia and Hungary may not support sanctions against Russian energy. These countries are among the most skeptical over EU plans. The European Commission is reportedly ready to grant these two countries in a delay until 2024. At the same time, the G7 countries supported the European Union and also announced their intention to impose an oil embargo on Russia. Moreover, they are committed to banning the import of both oil and gas. Recall that the group of 7 includes the United States, Great Britain, Canada, Germany, Italy, France and Japan. Meanwhile, Russia is working on new supply agreements with China. However, the epidemiological situation in the country is extremely unfavorable, which has already resulted in a spate of lockdowns in China's biggest manufacturing hubs and reduced energy consumption. Besides, it's worth taking into account the decision of Saudi Arabia's state-controlled Saudi Aramco to lower the price of its Arab-light crude grade. As a result, Brent crude oil failed to break above the key level of $115 per barrel. In addition, the dollar's rally is running on dollar-denominated crude oil futures. Thus, the US dollar index opened the trading week at a 20-year high. The greenback managed to gain value even against the Russian currency, which and while the ruble has posted solid gains over the past few months despite sanctions and a stronger US dollar across the board. The fact is that the Russians celebrate Victory Day on a Monday and Tuesday. Thus, the Moscow exchange is closed and exporters have suspended the sale of foreign exchange earnings. Against this background, the ruble has entered a correction, which will help it get out of overbought territory. And today, $1 is worth 67.70 rubles. Gold also fell below the key level of $1,880 per troy ounce. Investors continue to mull over the Fed's intention to follow an aggressive rate hiking path. Market participants shifted their attention to the 10-year US government bonds, and the metals lead by 6% compared to April levels. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.